I am honored to have Clint Russell, and he has a podcast called Liberty Lockdown. And I've been listening to your show for quite a while, Clint. And like I mentioned, I have a lot of real estate investing gurus that come on my show and paint the outlook in our economy pretty rosy. And I know with your experience, I know you and your dad have done a lot of real estate investing. I just really
Hundreds
wanted,
of millions. Yeah.
I wanted some bare bones. Let's state what's actually going on regarding the economy. And this is the first time I think a lot of people are going to really realize that I slant heavily towards the libertarian side of things. You even mentioned on one of your episodes that we have kind of a superpower in the fact that we understand at a deeper level what's going on, and we can maybe even take advantage of the situation in certain regards. So,
Oh yeah,
Clint, I'm just kind of giving you the floor regarding this. Maybe we even have to go down some Austrian economics for some people, but I just value your time here today.
yeah. Well, thank you for having me. Yeah, like you said, the show is Liberty Lockdown. So if anybody wants to check it out, feel free. I'm on all the normal platforms. I started it 2.5 years ago, and right in the beginning of COVID. Prior to that, I was a private money mortgage broker for 15 years, give or take. And I know of which I speak. I understand the real estate market intimately. The entrepreneurial aspect of that was about a decade. So I'm currently building 6 houses. I've done hundreds of millions of dollars in loans. I've also liquidated hundreds of millions of dollars worth of foreclosures in the 0809 crisis. So I know the good, the bad, the ugly, all of it. And I am of the opinion that in this escalating interest rate cycle via the Federal Reserve, we are due for some serious pain. We would have had serious pain in 2020, 2021, if it weren't for the foreclosure and eviction moratorium, as well as maintaining interest rates at record low levels. Obviously, because of the inflationary pressures that we're experiencing, the Federal Reserve is now feeling driven to hike interest rates, reverse their quantitative easing into a quantitative tightening program. And as such, if they maintain that course, I think we will have a terrible recession that will strike. Well, I mean, we're already in a recession, but I think it will strike the real estate market. Maybe not as severely as the 0809 collapse, simply because there's not as many adjustable rate mortgages as there once. But I am short-term extraordinarily bearish on real estate, long-term because of the inflationary pressures, because I believe the Federal Reserve will do what the ECB did on Monday, where they reversed course because they realized that there was systemic risk and the contagion effects from their plans to hike interest rates that were already putting Deutsche Bank and a handful of other, major money managers, tycoons on the ropes in their neck of the woods. For those that aren't aware, our globalized economy is now extraordinarily interconnected. If you see banks in Europe that are on the precipice, that means via the derivatives contracts that American banks are under threat as well. And the Federal Reserve has not reversed course as of yet, but my expectation is that they will.
Well, we see it all the time, right? We have naturally let the Fed just go rampant when it comes to, they always overcorrect, whether it's undercorrect or overcorrect, and we're the ones dealing with this rubber band in the middle.
Yep. Yeah. That's why I exited the game, to be blunt. I mean, first off, I couldn't evaluate macro risks because of the lockdowns, which were the most un-American, unconstitutional, evil things I've ever imagined to have occurred in my lifetime. I'm sure some of your audience won't agree with that, but I stand by it. It didn't prevent or stop the pandemic. It hardly slowed it at all. And we are now suffering terrible economic consequences because of it, not to mention all of the drug addiction, overdoses, suicides, children that are destroyed because of it, not to mention those that aren't destroyed, but simply have, been held back for a couple of years in terms of their education. It was a catastrophe. And so that paired with the fact that we printed $7 trillion in 2020 and the Federal Reserve was just out of their minds, I no longer felt as a fiduciary to my investors that I could in good conscience continue doing what I was doing. So I stopped. It was a hard decision, but in hindsight, it was the proper one because as a private money mortgage broker, I had 2 to 3 year loan durations. So almost my entire book has rolled off at this point, which makes me feel great because now I know that if my investors' capital is at risk, it's not going to be under my name. It's going to be under some other broker who continued to, disperse their capital into a very perilous marketplace. So that's kind of my synopsis on everything. I hate to be the bearer of bad news. I hope that I'm wrong, but given my track record, especially, predicting in 0506 that we would have a major real estate correction in 0809, or 0708 is really when I was predicting it, and it happened 0809, so I was a year early. Once again, in this situation, I was probably a year early again. My track record's pretty good, unfortunately.
Yeah. You just said you're finished building 6 houses. What does the outlook look like for you there? I think I saw, whether it was on Twitter or maybe even on your podcast, you even said did you sell the last one, or you got
I
paperwork
have
signed on the
5
other
of
one?
6 are under contract, but until they're done and closed, that doesn't mean much, you know?
Yeah.
So, I'm still in danger in that project for sure, but I think that I'll be okay. We're already in the framing stage, of the 5. One of them is already completed and will close next week, so I should exit in an okay condition. The material costs, because of lockdowns and the inflation that we experienced over the past 2 years, increased my input costs tremendously. So it absorbed basically all of the profit that I was expecting to make from the project. The prices, the exit price, the sale price of
Mhm.
all of them has also gone up, but not quite as much as I had hoped. So it's marginal at best. But my hope is to be completely out of the real estate market by at the latest, January, February of 2023.
Okay. So what are your recommendations then? What should people be aware of? What would you recommend people do now that are still deep into real estate? I mean, a lot of people see this as their exit strategy when it comes to retirement, frankly.
Yeah. Well, I think if you have a long enough time horizon, you'll probably be okay. The majority of my listeners are not professional real estate investors. They are, you know, single family type folks that, if they're lucky enough to own one property and a rental property, they're crushing it. So those
Mhm.
folks are the ones that I'm usually speaking to. A professional investor, I hope you're already privy to the macro risks that we're undergoing right now. And I hope that you're hedging or divesting or liquidating, or I mean, I pray you've already refinanced into the record low rates when it was, south of 3%. If you did that, then I think you'll be fine. You can weather it. I mean, 3% rates are legendary. They're
Mhm.
record breaking insanity that should have never happened. And that's part of the reason that we're in such a bubble. From my vantage point, liquidating, if you have tremendous equity, liquidating in this period makes a ton of sense. That's my personal opinion. I'm not giving any financial advice. You do whatever you want with your book. Obviously, I would never deign to tell someone what they should do. However, I think that if you have a long enough time horizon and you can't exit for whatever reason, but your financing costs are reasonable, then it'll probably work out okay. I mean, long term, there's still obviously a tremendous amount of demand for real estate. I think that because of the inflationary pressures, which I honestly don't think that the Federal Reserve can maintain this course of hiking interest rates. I think they'll blow up the entire financial market if they do. So I think they'll reverse course and probably start with QE and reductions in interest rates once again. And in that environment, we should see inflationary pressures, which buoy and ultimately escalate the real estate market to a higher level than they are right now. But that could be 4, 5, 6 years, and for many younger investors in particular, they can't weather that interim period, that 3 or 4 years where they're underwater. So those are more the people that I speak to on my show. For a professional investor, you know, you could take a longer time horizon view.
Yeah, well, most of the people that listen to this show, it's almost an 80-20 rule, Clint. It's 80% of people that are looking to get into real estate investing. They're trying to decide on making that jump into this. And then you have the 20%
Well,
that listen
I
to
just
it
I just
for
I just puckered their buttholes.
I would say so, yeah. But I mean, we have to face reality. And like I mentioned, I get a lot of real estate investing gurus on who paint a really rosy picture, and they basically onward and upward. And they focus very heavily on this is when millionaires are made. The market gets down and this is the time to buy, or you're on the
But
verge of being in a situation. It's the time to buy.
in what market is it down? I mean, what are they referencing when they say that the market's down right now?
In my market, I'm already seeing softening of prices. Prices are starting to drop on real estate, and with the interest rates climbing, the pool of buyers is shrinking fast.
Well, it is, but this is the beginning. I mean,
I
a
know.
real estate decline usually takes 18 months or so for the teeth to really sink in. I strongly disagree that buying right now is when millionaires are made. I would say millionaires are the people that sell right now and they go to cash. I mean, that's my honest opinion. Now, I do agree with them that millionaires are made in bear markets, but this is not a bear market in real estate yet. It will be.
Mm.
And I think that will be your opportunity. So if you are listening right now and you don't own real estate, well, then count yourself lucky, because I think you are setting incredibly pretty, especially if you have your income and your credit in order and you're able to qualify for a mortgage when the time comes. I think that you will be able to enter the real estate market probably 25% under what it was just 6 months ago. That's tremendously advantageous, especially if you have a shorter, time horizon in terms of your hold, your flip, whatever you're planning to do. It will hurt you because the interest rates are elevated significantly from what you could have bought, late last year. But if you don't hold for the duration, that interest rate doesn't matter tremendously. So I think that that's the opportunity. But really, I think that the thing that I'm stunned that professional real estate investors in particular wouldn't see this as, tremendous headwinds in front of us, in the sense that escalating interest rates due to the debt to income ratios and the qualification process for borrowers, how is it that they're going to acquire these properties at these price levels? The answer is the vast majority of people will not be able to. So
Mhm.
that means that the prices will come down to meet that demand, because the demand is not at these levels, not at these interest rates. It's not. So, I mean, give me pushback if you got any, man. I would love
I'm
to be
not going
more,
to push. I'm not going to push back. In fact, that's
I
why
would
I
love to
have
be
you
more
on,
bullish.
Clint. That's why I have you on, because like I said, I'm tired of hearing it. And when
Yeah,
you are facing facts with the lockdowns and everything that went on, we saw a huge sharp increase in not only labor costs, but we also going to your local Home Depot. I mean,
of course.
everything was increased, and now we are dealing with, on the verge. You said maybe 18 months is going to be a bear market when it comes to real estate investing. All of this has created the perfect storm. I mean, it's just a mess. In fact, my underwriting calculations are just completely off right now. I can't trust any of it.
Right. That's I completely agree, man. And that's why I exited the market 2 years ago, because even at that point I couldn't evaluate things in a secure fashion, because I realized that if you're going to print 7 trillion, you're going to create inflationary pressures. That's obviously bullish for real estate. The flip side of that is inflation causes the Federal Reserve, under their mandate, if they're going to abide by it, which they don't have any legal necessity to do so, but because of pitchforks, because the people will ultimately rise up if inflation gets and stays severe enough that the pain is so significant that they feel as if they're being wronged egregiously, which they are, mind you. Uh, then the Federal Reserve will hike interest rates to defend the dollar and to ultimately keep their position of power. And that's what they're doing currently. But I think that when it comes to, do they decide to protect the citizen via sound money, or do they protect their interests, which is the biggest banks, the biggest money managers on earth? I think that they're going to side with the banks. So I think that they will ultimately revert to an inflationary cycle, and they will let us suffer and languish underneath it. That's my expectation. I could be wrong. I hope I'm wrong, but I don't know. We'll see.
Well, it just seems like they don't even learn from their own lessons. I mean, we keep going through these cycles. Inflation is a record high. They just keep printing money, and then whether it's bailouts or the lockdowns, we print how many trillions of dollars for that, and then we're sending more trillions. We're just printing money to foreign countries. It just doesn't stop.
Yeah, well, and now the U.S. central bank is essentially the backstop to the global economy. It's no longer that we're just looking after our own assets and our own companies and our own people. We're now the backstop to any defaults that happen in any major money manager across the world. But we do, what's it called? I don't know if it's credit swaps, or I can't remember the term, but essentially it's the Fed window is now open to currency swaps. Like in Europe right now, we're doing that. From what I've read, we've also been doing that for the Japanese with the yen. So this is completely unsustainable. You cannot be a central bank for the world. I'm sorry. Like, you can
Mm.
have a lot of hubris, you can have a tremendous amount of confidence in yourselves, but you guys can't even manage it just for the United States, much less the planet, folks. So I think that ends in absolute disaster. And we're already witnessing it. What the fascinating thing is that even though the United States is experiencing, in my lifetime, the greatest inflation we've ever experienced in the 8, 9 A lot of people think it's higher, but we'll just go with CPI numbers, say it's 8%. What's fascinating, though, is that the US dollar compared to the baskets of other Western currencies and even some Eastern ones, uh, we're crushing it. We're way stronger. I mean, the Canadian dollar, the Australian dollar, yuan, the yen, everything else is confetti compared to the US dollar. We're very, very strong. So this is a global phenomenon. And because of that, I am extraordinarily concerned about where we're headed. Because if you have a global currency crisis, it's one thing if you have, you had the Asian flu, they called it in the late 90s, you had the peso in Mexico and the Latin America financial crisis in the late 80s, early 90s. This is, if you have a one-off, or if you have even a basket of currencies or countries that have issues with their solvency, that's one thing. But if you have a global system that is all insolvent, we have never experienced that before in human history. So I don't know what that means. And anybody that tells you exactly what that means is lying, because we have never seen it. There is no cognate. There is no historical comparison where I can go, I've seen this before. I know what happens next. No, I don't. But I am very concerned about it. And if you're not paying attention to it, you should be, particularly if you're a real estate investor.
I hate to shift the conversation a little bit, but I keep coming back to the last couple of years where we just tolerated these lockdowns and everybody just kind of went into lockstep regarding the messaging. Do you think that we're going to see some sort of propaganda associated with this, that everybody just kind of adapts and just lives with it? Like we're not.
Well, yeah,
It,
no, we certainly are, and we have been. I mean, the blaming inflation, for instance, they attempted very strongly to blame all of our inflationary issues on Vladimir Putin. That was
Mhm.
the initial narrative as to why our economy was in shambles. It wasn't the 7 trillion we printed or the record interest rates that we maintained for 15 years. Had nothing to do with that. It was just Vladimir Putin invading Ukraine. I mean, it's total lunacy. I mean, not saying that that has no impact. I'm sure it has some impact, but to blame it on that entirely is just laughable. So I think that the next propaganda push will likely be that central bank digital currencies are the only answer. I think that that will be their band-aid offered, and it'll probably be implemented via a universal basic income, because the financial pain will be so significant that people will just say, look, I need help. How am I going to get help? And the central banks are going to turn to you and say, hey, we have help, but it's a new currency. It's called the digital dollar, and we will give you X amount of it per month. You just have to give over all of your biometric data, and here you go. Bob's your uncle. CBDC is rolled out. That's my expectation. That's more along the conspiracy thinking route. I'm not saying that for a fact. The other stuff I'm very confident about. This I'm less confident about, but I do think it's the probable outcome because I don't see an alternative, honestly.
Where the conspiracy probably comes to reality, though, as we already saw it with Visa and MasterCard. You go into digital currency, have one bad tweet, according to their opinion, and they will shut you down. I mean, we already
Mhm.
see that.
It already
Uh,
happened in Canada with the Freedom Convoy. They did it to the truckers, and that was, yeah. I think that's the inevitable conclusion of this, is that, unfortunately the Western world has been following in the footsteps of the CCP. They want to have social credit systems. They already have it on the corporate level via ESG, environmental, social, and governance, and I think that they're going to implement it to the consumer level via universal basic income and central bank digital currencies. That's my expectation. I mean, they talk about it. Christine Lagarde, who's the head of I think the ECB, I forget what her exact title is, but she was talking about it just this week. We have Fed papers, we have Fed white papers that are discussing central bank digital currencies. Like this is not, me just pulling stuff out of thin air. Like they are
mhm.
openly discussing it. They're openly working on it. They have been working on it for years, and that work has sped up ever since the lockdowns began. So I think it's just a matter of, is it ready for showtime? Because if it is, then I think that it'll be implemented very soon. And if it isn't, then they're going to delay the day of reckoning via manipulating the interest rates via the Federal Reserve until they can get to that. I honestly believe that's the only outcome that I can envision, because the alternatives are so, I mean, and for the record, that's about as dystopian as it gets. But from the normie's perspective, someone who doesn't understand any of the stuff I'm talking about, they're still going to view UBI and a central bank digital currency as an improvement over 10 to 20% annualized inflation that just shreds our savings and our purchasing capacity for decades and decades moving forward. I don't think that anyone's going to be happy about that outcome, and they're just going to look at the CBDC as, you know, a bailout,
Mhm.
and they couldn't be more wrong.
Give us something, Clint. What can people take advantage of here? You mentioned that we might have an ability to have a superpower when it comes to the outlook. You
Sure.
already made a mention, you know, hold on to your resources until it's time to strike. But would you say when that time comes, would you focus on single family? Would you focus on multifamily? Would you focus on storage units because that's where we're all living?
Yeah, I mean, I certainly wouldn't focus on cities. I would probably be most interested in purchasing real estate rurally, because I think if we do enter a sustained inflationary period, you'll see crime and all sorts of craziness within the cities that you won't want to have to you don't want to be a landlord over a property where there's a ton of crime. So
Mm.
I think a lot of people are already have been and will continue to migrate to the more rural living. And at this point, I think that those will be the value buys during the bear market in real estate. I also think that long term, you know, that's probably going to be some of the best investments you can make, because the dollar and globally fiat currency. By fiat, since your audience isn't libertarian, I'll just explain. It just means printed money that's just backed by the, you know, the full faith and promises of the government, whatever that means. So I think that as we see more and more fiat currencies essentially dissipate, you'll see a tremendous amount of further and increasing interest in the Bitcoin market. I would highly recommend, if you haven't at least got what I consider an insurance plan in some Bitcoin, I think that now would be a good time to take a look, because as of 8 months ago, before this bear market began, you would have been paying 60 to 70,000 per Bitcoin. You can now get it for under 20. I'm the type of investor, when I see that, then I start to become interested. The average investor sees the price go from 20 to 70, then they get interested. I do the opposite. It's a much
Mhm.
better way to live, trust me. So
Yeah.
I think that that would be a good hedge against inflation, especially if they do migrate to a central bank digital currency, in which case you will have full panopticon surveillance, and you don't want to live that way. Well, Bitcoin will be a much more less easily trackable mechanism for, you know, purchasing things and transferring assets, things like that. So I think that that'll be a huge opportunity. I think that there may be lower entry points. Let me be very clear. I think that, you know, Bitcoin could go significantly lower from here, in which case I would advise dollar cost averaging, like get a little bit now, just as it drops every time it ticks down another 1,000, get a little bit more. And then, you know, if it gets down to 10,000 or something like that, and you feel like, okay, I feel like this the bottom's in, okay, well then get whatever the rest you want, and then just set it aside. Like that's my plan. I think over a decade that will be just an incredible opportunity. So I like that. If it's just a couple percent of your portfolio, I think that over a decade that could potentially make up for the rest of your portfolio. Like honestly, that's how bullish I am. So I think that that's one hedge. And then if you're interested in real estate, I think that in the next 2 years you will have opportunities to do so. But I'm a keep your powder dry when there's uncertainty, and the uncertainty for me pretty high right now.
Mhm. Yeah, when you said fiat, it reminded me, I have to share that it was one of the proudest moments I've had in a long time. My 16-year-old daughter, we were sitting at the kitchen table, and I said fiat in a conversation, and my wife asked, "What do you mean by that?" And my daughter explained it to her.
Oh, that's beautiful. Good job, Dad.
I was just like, "Oh man, that made me happy that night."
I was worried you're gonna say, she's like, I don't really like that car.
No, that was just really great.
No, that's
So
incredible, man. That's great. You
yeah.
did good work.
So, well, Clint, I appreciate you giving me the time here tonight regarding this. And again, I want to remind everybody, head over to Liberty Lockdown, the podcast that Clint hosts. You have some amazing guests on, Clint, including I listened to an interview with somebody just the other night. I'm sorry, I forgot his name, but the amount of interest that we pay on notes for the United States it was shocking, especially when then he goes, well, and this is the amount of tax dollars we collect. It was,
It doesn't pencil.
it doesn't pencil.
Jason Burek, who was the
Jason
guest
Burr.
there. Yeah,
Yeah.
he's the host of Wall Street from Main Street. Brilliant central bank analyst, and he definitely has added to my wealth of knowledge. Today I did an interview with Greg Foss, who's been a bond trader for 35 years, as well as Guy Swan, who is quote unquote the man who has read more about Bitcoin than any human being on earth. And between the three of us, we did a 2.5 hour deep dive into the economy. And I would highly recommend people check that out. If you want a horrifying understanding as to why particularly the libertarian audience is so bearish right now, that'll do it. That'll scare you straight. It won't make you feel warm and fuzzy inside, but my personal opinion as a professional money manager and as a lifelong investor, it's not about being warm and fuzzy. It's about looking the truth right in its face and planning accordingly so that you can profit from it and hopefully look after your friends and family.
I talk a lot on the show, Clint, is that we look for return on investment, but we also look for, as far as I'm concerned, we look for return on time.
Right.
And the investment that I place into your podcast has been especially valuable to me. You wearing a naturalist capitalist shirt too. I like that podcast as well.
Yeah, I'm just giving support to my buddy, you know.
Yeah. So again, Liberty Lockdown. I'll make sure to have links, corresponding links in the show notes, but I can't thank you enough, Clint. I promised to try to keep this to 30 minutes, so I'm going to try to do my best to do that. But is there anything else that you can think of that we should have covered? Any questions I should have asked?
I mean, there's so much more I could talk about with the economy. So I don't think it's worth me going deeper because it would stretch us out for another hour. But you know, I just really want to double down and emphasize that in bear markets, that is where life-changing money is made. My only emphasis would be the real estate market is not a bear market yet. Just sit there, be ready, pounce when you see the opportunities. There will be opportunities. I just don't think that they are right this minute. So yeah, you can make life-changing money during these periods though. I completely turned my life around. I went from basically a broke college kid to a millionaire in 5 years because of my ability to invest in the 08 through 2010, 2011 market. And you could do the same theoretically or potentially. So do not allow the scary stuff that I said in the past 30 minutes to dissuade you or make you put your head in the sand or, you know, cower or become horrified. Like, that's what investing is about, man. It's about evaluating risk and realizing when outsized returns can be found. And if you find them, you can change your life. So I hope that people will take away from this a sense of optimism, even though I've presented nothing but negative information.
Well, thank you so much, Clint. I can't ask for a better 30 minutes, so I really appreciate it.
My pleasure, Jack.
But hopefully we'll talk again sometime. Maybe in the bearish market, I can bug you again.
Yeah. When I feel like there's an opportunity to buy in real estate, feel free to have me back.
Yeah, we maybe have a rosier outlook.
Yeah, I hope so, man. I would love to be a bull again.
Well, thank you, sir. We'll talk to you soon.